Hi everybody, I want to make this quick video for you talking about the Renko charts. I spoke about it earlier on in the announcement channel. We're back from the hospital actually. My wife is back home and she's all safe and sound and she's having a wee sleep just now, so I thought I'd make you a video just now while she's sleeping. But she's all good, and thanks for all the kind of messages as well, really appreciate it. But I wanted to show you something just now, and I'm just going to nip over and show you and get into this straight away for you. What is this Renko? Why am I kind of so excited about it? And I'm just going to show you just now. Just bear with me a wee second. If I can get this. Right, okay, so we're going to look at the traditional kind of chart for Bitcoin. This is on the 1 hourly chart, and we're going to look at the candles. This is a normal candle chart. You can see here we've got the 15 EMA just as normal, and this is on the hourly, as I said. Now if we go back to the 15th of July, this is when really kind of Bitcoin started making its run up. So we go back to the 15th of July, you can see all the run ups here, but you can see lots of red candles. So we'll kind of zoom in a little bit. You can see lots of red candles, and a lot of people might have got spooked and thought, shit, there's a red candle there, and maybe got out or left it because it was above the 15 EMA. And still all the way up it was above the 15 EMA. And then down here we get some choppy price movement. So a lot of people would have got in and out of there. Around about this line here, we can see it's kind of trading within a channel. I mentioned this the other day. It's trading between 7,300 and 7,500. Kind of tried to break out there, didn't quite make it. Tried to break out a couple of times, and it looks as if it's trying again just now. It's 7471. So I think this time it's going to make it. This will be the 4th or 5th time it's tried to break out of this channel, and I think it's going to do it. Usually when it's tried to break out a couple of times and it's not made it, then after 4 or 5 times it is eventually going to make it. So you can see here this is a traditional one, and it's difficult to know when to get in on kind of a chart like this. If you came in a bit later, if you're up here or something and you've seen a couple of red candles, you say, oh, I'm not going to get in just now. And then you're still seeing the red candles, you just hold off, and then before you know it, kind of price is broken, and you think, oh, it's too late to get in now. So what I'm looking to do is kind of break that down. So what I was doing is using something else called the Heikin-Ashi chart. This broke it down a little bit better. There wasn't as much noise in the marketplace. So this is a Heikin-Ashi chart. So you can see more green there. It's filtering out a lot of the noise and the price movement there as well. So it kind of tells us to stay in the trade using the Heikin-Ashi. But it's still the same here. It's still choppy here, in and out, because it's trading sideways. So I wanted to do another thing. I thought, okay, how can I make the calls better? I want you to make money. That's what I get most pleasure from. If you're making money, that's where I get my pleasure from, and that's what excites me the most. Obviously, I'm excited about making money myself, but it's more exciting when you make money as well. So when I've been coming back and forth from the hospital at night, from about 9 o'clock to about 1 o'clock in the morning, I've been kind of looking at ways and testing ways and doing lots of different things. And I came up with this Renko chart. I'm going to show you that just now. So we'll go here and we'll split this down. This is the Renko chart on the right hand side. This is the Renko chart for the 1 hour. And we'll go back to, this is round about the same period. So we can see here on the left hand side, this is a traditional chart. There's been lots of places we might have got in and out based on the signals from here. This is still choppy, but based on the signals we might have been out of the market and stayed out just because we didn't know which way it was going to go. But on the Renko chart we can see it's much different, and we can see here it started at 6,227. And these little green boxes on the 1 hour chart represents $42.40. So on a 1 hour chart it's usually around about 2%. So for this to go up and make a green box, it has to precede the previous candle by $42.40. And it's done that, and it's not based on time. These candles are based on 1 hour candles. So this is not based on time. So we can see here at the bottom, 6 o'clock in the morning on the 15th. The next candle was 9 o'clock in the morning on the 15th. The next candle, it didn't come into play until 4 o'clock. So these are not time based at all on the Renko chart. And we have to remember that. So because it's not time based, you get a much better view of where the trend is and when to stay in and when to get out. So your entry point, you could have seen here on the 14th or from round about the 12th or something like that. I think it was round about, yeah, it was about the 8th of July. You can see you'd have got out round about here at 6,654, rolled it all the way down on the first green candle, the first full candle that's gone $42.40 above this red candle. Then that would be the time to get in at 6,273, and you would have left it until you've seen another red brick. Now Renko is Japanese. It's a Japanese word. It's thought to be a derivative of renga, which means brick. So these little candles represent bricks. So it's building bricks, and all the way up to here is 7466, and that's I'll just chart the percentage there. Say here a 17% rise you could have gotten in Bitcoin and stayed in it without looking at all this and without getting concerned, without getting worried on the left hand side chart. You'd have stayed in it until you got a full red brick at 7,374. Now you can see here this is a bit choppy again because we'll get another green brick immediately after, then another green brick after that. But the beauty of this system is you know when to get in and you know when to get out. So as I said, we would have got in here when that green brick finished his first green candle. It was a full green candle. So we'd have got in here at 6277 and we would have got out at 7376. Sorry. So a full $1,000 profit on the Bitcoin trade. Now you get back in, so when it's trading sideways, you're going to be in and out. So you can see here, in and out, in and out, in and out, in and out. But the last ones, you can see here, you would have got in at 7,334, and you'd have still been in the trade at 7462. So it's, what is it just now? 7478. So you'd still be in the trade at the moment until we've seen another red brick. So, where do we set our stop losses? We'll just enlarge this. So you can see there's a much smoother chart as well. We can see clearly where it's gone down. We can see clearly when it's gone up. So we can see the trend much more clearly without looking at all the noise of the market, the price movements. And this is purely based on price movement. It's not volume. It's not anything. It's not time. It's purely based on price movement. And that's all we were looking for. So we want to quickly look at a chart and say, is this an uptrend? Is it a downtrend? Where does it go next? So if we were to get in, say, we've seen the red brick and then we've seen the other green brick and we got in at 7334. We just stayed in there and we just kept in there. We just set a stop loss. So the way to set stop losses is to go one red brick down. So the stop loss, I'm just going to chart it here so you can see it very clearly. And we'll do a red line for a stop loss. So this is your entry point here. The stop loss would have been just below the previous red brick. So that would have been your stop loss is 7242. If you got in at 7334. Now that represents 1.31%. So that's the maximum you would have lost if you got in here, but say it shot all the way down because you've got a 1.31% kind of stop loss here, then you're going to get stopped out fairly quickly, which minimizes your losses. But in this trade, in particular trade, you'd have still been in. It would have still been in here. You'd have been up at the moment. If we got in here, you'd have been up at the moment 1.93%. And if that keeps going up, you'd still be in the trade until there's another red brick. So what we're going to do is we're going to look at a couple of charts. So that was a Bitcoin chart. So it looks a beautiful looking chart there. And as I said, it's not time based at all. So you could get like 5 green bricks in an hour if it was to shoot up. So we'll look at some. Mana is a good example here. So this is on the hourly chart. You can see Mana coming all the way down from 3,665 all the way down to here. So if you'd done a short trade on Mana and you'd have got out here, it'd have been a 51% profit, or we'd do it the other way actually. Much higher. So we sold it short here for 102% profit return on investment. But right now, as it stands just now, Mana is looking good, and we're going to look closely at this. So we've seen the red bricks here. This is on the 19th of July. We've seen a green brick. We'd have got in just when this closed at 1663. And we'd have put our stop loss, so we'll just say when we're going to get in. So green is going to be the entry point. We'd have got in here, and we'll do another one for red as the stop loss. So the stop loss would have been just below the previous red brick. And we can see here, there's a wick there that came down. So to put it just below here, at 1542. That represents a stop loss limit of 7.31%, so slightly higher than we normally go at 6% to 10%, but you'd have still been in the trade at the moment. So we get in here, it comes down, you might start to panic a little, but not until another red brick forms here would you get out round about there. And we'd have still been in the trade just now, so if we'd got in that trade on Mana, we'd be up 12% at the moment, and it's still in play at the moment as well. Now this is on TradingView. So we can see here there's labels on the right hand side. At the moment the price is 1863, and the top of the line here, top of the brick, is 1872. So each brick represents 2.77%. So we'd need Mana to get up to round about here in 1926 to form another green brick and to stay in the trade. If it was going to come down, we'd get out at 1768, which still represents a good, nice profit from where we got in. So that would have been, if it did come down, it would have still been a 6% trade on that. So I hope this is making sense. We'll try and find another chart for you just to go through a couple of them. Right, this is what, oh, that just disappeared there. I wanted to show you something as well with these charts. PivX has started to go up. So we can see here a couple of green candles forming, but they're not quite as bold as these ones. That's because it's not fully formed and it's not gone past the hour mark yet. So once it goes past the hour mark, this green candle will go green bold. This one won't because it's not fully formed. So it has to be above 1.69% of the previous candle. You don't need to know all this, but this is kind of how it works. So I just want to show you how it works. So in about, I don't know what time it is just now, in about 25 minutes, if this is still the same price at 2678, then this candle here will go fully green like this one. This won't because it's not fully formed. So all the bricks are the same size. So unless it goes up again, this, and you can see it coming down slightly as well. So it's not fully formed yet. So if we go in here at 2536, and we were still in the trade just now, we'd be up so far of about 5% and still be in the trade for that. And if we got in here, we'd set our stop loss just below the previous red candle, which was 2486, which represents 3.67% stop loss. So you minimize your stop loss, or you minimize your losses by doing it this way, and you maximize your return because you're just going to stay in the trade. You don't get out until there's a red candle formed, and you can see that other green brick has just disappeared. So that means the price is slightly coming down again. And this one might come down again as well. We'll just need to wait and see when the hour mark is up. But as I said, it's not time based. This could last for 4 to 5 hours, and you could get 5 candles in a row within an hour as well. So when you're looking at this, very easy to see your entry points, very easy to see your exit points. And we'll look for another good return. What's kind of risen up just now? There's a 31% RAP. So we can see here, this is what I was talking about. You can see all these faded green candles. That's because Ogre has just shot up within the last hour. So in 25 minutes, you'll see all these green candles turning bright green like this one. So they're faded when it's not full of the hour yet, but it tells you which direction it's still going. So if you'd got in at Ogre just now, here, at 41.46, at the moment you would be up 21% if you were looking at this and using it to get into a position. So 41.41 you'd have got in, and you'd have set your stop loss just below the previous red at 3822, and that would have represented, it'd be 8% stop loss. So not quite 10%, so 8% stop loss, but you'd have been in the trade, you wouldn't have been stopped out, you'd still be in that trade at the moment. So that looks a brilliant one just now, and that's just literally just shot up. Mana, as I said, that looks a good one as well. And if you're coming in, say for example just now for Mana, you're thinking, should I get in just now? We see this green brick, and then we say, okay, where is the price just now? The top of the green brick we can see is 1870. The price at the moment is 1870, so still in play at the moment, not until it comes down again. You can see a green brick just about to form. If this goes up to 1872, you'll see a green brick starting to form. But it's coming down a bit just now. So a red brick is not going to form until we get to here. It's 1766. But we don't need to know the price movement. We just need to know the price and where it is just now. So if we kind of scroll all the way up, we can see 1872 is the price of the top of this green candle, and 1863 is where it's at just now. So if it moves above 1872, you'll start to see a green candle just forming here. And we'll just wait and see if that's going to move up or not. Now it's starting to come down a wee bit, but it's had a good run. And we'll just stop that noise just now. Okay, so we'll look for a couple of others, and what to do, the best thing to do is just scroll down your Binance list, and this is on TradingView, and we'll find a couple of ones that are in play. In fact, I'm going to show you Dent. Dent is one of the ones I got into, and had I seen this in the Renko chart before, I would never have got into Dent, and I'll show you why. Okay. This is Dent on the 1 hourly. You can see when Dent first came out, around about the 6th of July, we'd have got in here at 84 Satoshi. We'd have got out, we wouldn't have got out until we'd made a 67% profit because of all these green candles saying we're still in the trade, we're still in, and they wouldn't have got out till that first red candle had formed, and that's your indication to get out. So it's now fell from there, and I'm just going to show you how much it's fell. It's fell 68% from there. So I got in as 62, round about here. Round about here. So I got in as 62. It kind of went up by about 2 Satoshi, then it came down, so I should have got out at 60. And that would have only been 3.29% stop loss. But at the moment, I'm still in the trade. thinking not thinking it's going to go back up, thinking, okay, I'm just going to hold it long term because I know it's going to come back up. I'm just going to hold it long term, but it's tying up my trading money. So I'd have been better coming out at 60, getting a 3.29% loss on it, and started trading others. But you can see here on Dent, this green candle is just forming. When this gets to 48, then that will form a bright green candle like this. If it gets to 48, it's jumping up and down between 47 and 46 Satoshi just now. But if it gets to 48, that would be an entry point. So that would be an entry point once it gets to 48. It might come back to that, see where it gets to. And the same with PundiX. We'll look at PundiX just now. So on the hourly, PundiX has been going down since the 21st of June, since it came on. It's gone all the way down, it's gone all the way down. And what a lot of people have been thinking is, oh, it can't go any lower than this, oh, it can't go any lower than this, it can't go any lower than this. But it has been going lower and lower and lower all the time. So, now unfortunately we can't short PundiX, because as traders we should be shorting as well as kind of going long as well. But we can't short PundiX, unfortunately. So what we'd have done is we'd have looked for an entry position. This would have been an entry position here at 86. We'd have rode it up to 90. Not much of a profit, but we'd have rode it up to 90, which would have had a 5%, 4.89% profit. Then we would have got out instead of holding and staying in. So we would have been in and out a couple of times on PundiX. And right now would be a time to sell. And 42 even. But it's at 44 at the moment. We'll have to be aware of the price. So this bottom price is 42. It's 44 just now, which is around about here. If this goes to 46, it'll form another green brick. So it's 2 Satoshi. Each of these bricks represents 2 Satoshi. Or, to give you a percentage, about 4.66% of the price. Okay, so just look for a couple more, see if there's any good ones. So Monaco, we'd have got in here in 964, and we'd have got out here in 986. So not a big profit, but you minimise your losses as well. And where is it just now? The bottom price was 987, so it's starting to maybe come back up again. So we'll wait for another green brick to form at 1028. I hope this is making sense for you, because this is going to change, I think, the way we trade and the way I make the calls as well. So we'll look for a good example. It's not a brilliant example, but there's some crackers out there. Encash, this was kind of back at the end of June. We would have got an Encash at 195, rode it all the way up to 267, which would have represented a 40% profit, then got out, maybe jumping back in and out, but it's a bit choppy. So we'll just go down a couple more, see if we can get a good one. So Nulls is going on a run just now. It's up 3.67%. We'd have got in Nulls here, according to this, 31,164. If we were still in the trade, we'd be up 7% at the moment. So we wouldn't, and we'd set a stop loss. If we'd set a stop loss when we got in here, just here at 30,000, we'd have been moving that stop loss up. And when you move the stop loss up as well, what you're going to do if you're still in a trade, you'd move the stop loss up to where a red candle would form. So a red candle would form here at 32,279. So you move the stop loss just below there at 32,211 as you're moving your stop loss up. So, and that's all you're doing. You just keep moving the stop loss up. You know where your entry is. You know where your exit is as well. You know where your stop loss is going to be if you're going to put in a stop loss, and I recommend you do that just in case the market totally tanks and goes against you. So just look for a couple more, see if there's any other good trades. This is a good one to get in as well. So what we look for is one candle, one green candle, and that would be the perfect entry position. So this has started moving already from its bottom at 1823. We'd have gone here at 1861, still been in at nearly 1900. So there's a good one as well. That's actually OAX. So this would be a good one. We'd get in round about here in 948. It's 954 just now, but this is Omisigo. This might be the start of a run up for here. So we'd get in here at 948 and we'd say our stop loss in 922, which represents a 2.83% stop loss. So we're not going to lose that much, but the potential reward is much, much bigger. Okay, we'll keep going down here. I really enjoy looking at this and kind of telling you about it as well, because you can probably tell I'm quite excited about it. I think it's going to be good for our trading. The only thing with this is you need to have kind of trading view. I don't know if it works on Coinigy. I've not got a subscription to Coinigy anymore. I cancelled my subscription after I subscribed to TradingView. But you can get a TradingView account free for 30 days, the pro version. Get the pro version, and then after that is $29 or $30 a month or something. So I'll definitely go for that, and they've always got special offers on as well. So it's well worth $30 a month. You can get all these Binance listings here. I've got a Bittrex listing that lists everything on Bittrex, and you can build up your own list here as well with a pro account. We'll just see if there's another one that's perfect for setup. QuantStamp has kind of risen already. And see, you're going to get this as well, like Ripple Credit Network. You're saying, okay, I'm going to get in here at 585, and then it moves against you, so you'd set the stop loss at 565, which represents 3.43%, because it's going back down again. And you wouldn't have been stopped out yet. You'd still be in the trade at 571, so you'd wait until that came about, or you'd wait until that kind of finished, and it's finished just now. So you'd have been out of the trade, but you're going to get in and out of them, but it'll be very small losses and possible big returns. So this would be a kind of good one as a start. Raid Network is one I recommended the other day. You'd have still been in the trade just now at the price it is just now. 6% we would make on that, and we'd still be in the trade. RAP, as I said, has just gone up. So that's going to at 4 o'clock in 9 minutes time. These will all turn bright green. And you can see what I mean by loads of bricks forming, even in the space of an hour. Because it's not time dependent, it's just price dependent. And this might be a good one as Salt as well. We'll just go through a couple more. So there's a few coming into play just now. And I've been looking at this kind of back testing it, but it's not good back testing it. We'll have to go in with trades to test it really. And that's when we're going to really find out how it works, because back testing looks okay in theory, but we'll have to really go in with trades. And this would have been a good one as well, just for a short gain. We'd have got in here at 2264. And we'd have got out here at 1784. Is that right? Yeah, we'd have got out here 2264 and 24458. So that would have been 7%. And that's how we're looking for. So this is still using the 3 to 6 strategy. We still want small gains and just lots of them. It's a very choppy one. I wouldn't like to get in very choppy ones. You can see this is really kind of choppy. So you can see it's kind of trading down in a downtrend, but in and out, in and out, in and out. You don't want ones like that. And Wings has been like that for a while. So there's a one just starting to come up. So this would have been a good one. A Stella. If you're in that, you'd have still been... Oh, you'd have got stopped out now because of that red brick. But that would have represented the bottom of the red brick, 6.81%. And that's all we're looking for, small gains as day traders. Now, you can use longer chart time frames. So if we were to go into the daily one and look for one, just the first one that gives us a good one in the daily. So ADA, Cardano looks good on the daily. They would enter here. If we were just looking at daily and we just wanted long term, we'd enter 2337 and just leave that running. You can see what happened here. If you just left it running, you don't look at the price on the candlesticks, you don't look at the price at all you're doing is looking at the colour of these bricks. So if we go in here and 927 and rolled it all the way up to the first bottom of the first brick, we'd have got 673% return. And that's all because we're not looking at the price chart. Now if we go back and look at the price chart for ADA, if we go look at the candles and look at the action there, and we go into the daily, you can see here, so we might have gone here round about 900 or something, and then it started being choppy round about here, so we might have got out here and taken a profit. So we've taken a profit at about 287% when we could have taken a profit at 683%. So that's what it does. It cuts out a lot of this noise, and psychologically when you're looking at this you go, oh, I don't know where I'm going to get in, I don't know where I'm going to get out, I don't know what I'm doing. And then we look at the 15 EMA and we look for that crossing below that for things, but there's still a bit dubiety about that as well sometimes, because sometimes it just crosses over then it comes back down, like here it's down and in and out. So but this cuts all of that out altogether. A much better looking chart, and you can see when to get out, when to go on, when to get in, when to get out. So Renko chart. So there's not a lot of books on it. There's hardly any books on Amazon about it. There's not a lot of videos on it. A lot of people in the trading, they're trading the kind of FX. If they're doing FX, they use the Renko chart as well. But even then, a lot of people are not using it. But it just seems so much simpler. But the proof is in the pudding. So we're going to have to check it out. So the calls I'm going to be making are going to be based on the Renko charts. And it's still a 3 to 6 strategy. We still want really 10% or as much as possible, but we want to minimize our losses at the same time. So what we've been doing is getting a loss of 6% or 10% and then saying, right, that's us timed out. We don't want to do that anymore. We just want very small losses at 3%, 4%. Sometimes it might be 8% as well, depending on the size of the brick. And we'll take it from there. So that's it just now. If you have any questions, just let me know in the kind of chat area in the premium group, and I'll get this video out to you as soon as possible. Okay, so good luck with that. I hope you can check it out and see for yourself how good this could actually be, and we'll start trading using this chart instead of the Heiken Ashi chart, which I've been using for the last couple of weeks, and I didn't really tell you about that. I've just been testing it out, and it has been better calls with the Heiken Ashi chart because that cuts down the noise as well. This cuts it down even more. Okay, until the next time, take care. Bye now.